Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge Weekly Podcast. Today's date is the 22nd of December. Let's dive into the week's top market news. Europe advances amid growth optimism and central bank divergence. European equity markets recorded a solid performance last week, supported by signs of steady economic growth and an overall looser monetary policy stance. The Pan-European Stocks Europe 600 index closed up 1.60% in local currency, reflecting renewed risk appetite among investors. This positive sentiment extended to major national indices, with Italy's FTSE/MIB outperforming its peers with a 2.86% gain. The UK's FTSE 100 also showed strength with a 2.57% increase, while France's CAC 40 and Germany's DAX rose 1.03% and 0.42% respectively, confirming a widespread bullish trend across the continent. On the Eurozone monetary policy front, the European Central Bank, ECB, opted for stability, keeping the deposit rate unchanged at 2.0% for the fourth consecutive meeting. President Christine Lagarde described the current policy stance as adequate, while leaving the door open for future changes in response to economic outlook uncertainty. The Frankfurt institution reiterated that decisions will remain data-dependent and taken meeting by meeting. In a signal of confidence, the ECB revised annual GDP growth estimates upward to 1.4% for 2025 and 2027 to 2028, with a slight dip to 1.2% projected for 2026. Inflation projections indicate a decline just below the 2.0% target in the 2026 to 2027 period, before rising back toward the target in 2028. Across the channel, the Bank of England, BoE, took a different path, cutting the key rate by a quarter percentage point to 3.75%. The decision was particularly contested, with a 5-4 vote seeing Governor Andrew Bailey shift to a more dovish, accommodating stance. Although the BoE confirmed rates are on a gradual downward path, it clarified that judgments on further easing will become increasingly complex. This move was catalyzed by a sharp slowdown in annual inflation, which fell to 3.2% in November from 3.6% in October, a figure below consensus expectations. In parallel, the British labour market showed signs of weakening. Unemployment rose to 5.1% in the quarter ending in October, the highest level since early 2021, while regular pay growth decelerated to 4.6%. Elsewhere in Europe, Scandinavian central banks kept borrowing costs unchanged. Sweden's Riksbank left the key rate at 1.75%, in line with general expectations, signaling little likelihood of near-term changes. Similarly, Norway's Norges Bank maintained rates at 4.0%, judging it necessary for monetary policy to remain restrictive to tame inflationary pressures. Now our insight into alternative markets. Space Economy 2026. Europe's race for strategic sovereignty and equity market outlook. While the global space economy is projected by the World Economic Forum and MC Kinsey to reach a valuation of $1.8 trillion by 2035, the immediate outlook for European investors in the 2025 to 2026 cycle is defined by a critical pivot from general exploration to strategic sovereignty. The competitive landscape has shifted dramatically, driven not only by the rise of Eastern powers, but also by the overwhelming dominance of American private entities. The return of Donald Trump to the US presidency and the deepening influence of Elon Musk's SpaceX have highlighted Europe's dependency on foreign infrastructure, effectively acting as a catalyst for a drastic acceleration in continental consolidation and investment. The European market is currently witnessing a divergence from broader global trends. While the United States continues to lead in absolute volume, Europe is experiencing superior relative growth in terms of attractiveness for venture capital and private equity. Data indicates that private investment in the European space sector grew by approximately 56% year-on-year in 2024, reaching a total of €1.5 billion. A significant portion of this capital movement, roughly 16%, is linked to mergers and acquisitions, M&A. This activity underscores a clear market consensus. The European landscape is too fragmented, and 2026 will likely be the year of consolidation designed to create industrial champions capable of competing with US giants. This shift is further underpinned by robust institutional support, exemplified by Germany's confirmed €5.4 billion investment in European Space Agency (ESA) programs. For listed equities, the primary catalyst for 2026 is undoubtedly IRIS2, Infrastructure for Resilience, Interconnectivity and Security by Satellite, the European Union's sovereign satellite constellation, with a concession contract valued at approximately €10.6 billion, funded by a mix of 60% public and 40% private capital. This project acts as a massive stabilizer for the sector. The Space Rise Consortium, which includes major operators such as Eutelsat, SES, and Hispasat, is central to this initiative. For these companies, often penalized in public markets by the aggressive pricing of Starlink, IRIS2 offers a strategic defensive moat built on secure government cash flows and long-term infrastructure requirements. In the realm of large-cap industrial strategy, the most significant trend heading into 2026 is the potential structural integration among Europe's aerospace and defense titans, often referred to in financial circles as Project Bromo. Advanced discussions involving Airbus, Leonardo, and Thales aim to pool their space assets to achieve necessary economies of scale. For investors, this brings a spotlight onto stocks like Leonardo, which is already well positioned through its Space Alliance joint ventures, and Thales, which dominates the secure technology segment. The integration of these assets could unlock significant shareholder value by reducing redundancies and improving competitiveness against vertically integrated American rivals. Beyond the major conglomerates, the market offers high beta opportunities within the mid-cap and pre-IPO segments. Ovio remains the primary listed pure player for launches in Europe, with its equity performance heavily correlated to the technical success of the Vega C and the ramp-up of the Ariane 6 program. Concurrently, the new space ecosystem is maturing rapidly. Companies such as the Exploration Company, which raised substantial capital in late 2024 to develop cargo re-entry capabilities, and ISI, a leader in radar satellite imaging, represent the next wave of innovation. These firms are moving the sector away from speculative concepts toward tangible industrial applications in logistics and defense. In conclusion, the European space economy is transitioning from a niche thematic play into a central component of industrial and defense strategy. For the investor in 2026, the most prudent approach appears to be a diversified strategy that balances defensive positions in large-cap defense conglomerates, which benefit from dual-use spending, with recovery plays in satellite operators revitalized by sovereign contracts.
Thank you for listening to this episode of T-Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, thubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.